So we're down $65 for the day right now. It's pre-market Tuesday, but that is all right because if we go look on the weekly chart, we are up $170 since last week, and that's because we took a couple of trades yesterday, which helped me get a good start into the week. So what I'm going to be doing today is going over those trades and explain to you guys exactly what I ended up doing to be able to make $170 just in a matter of one trading day. So if you're interested, make sure you stay till the end of the video. Okay, so I'm recording the second part about a day later just because I was busy yesterday and I didn't have enough time to finish recording. We're currently down around $27 for the day. Not bad considering the overall market is down a lot more. Well, it's actually green, but I mean the overall sectors in which we are investing in, for example, airlines, are down a lot more for the day and for the week. See, for the week, American Airlines is down close to 12%. Bank of America is also down quite a bit. If we go ahead and look at the weekly, it's down around 5%, actually closer to 4%. So overall, all these sectors that we are investing and trading in, they're down considerably higher than what we are down. We're only down around 0.5% today. So nothing really to worry about. These positions are going to start turning in my favor once SPY starts going up a little bit higher. However, the overall trades that I've taken about 4 or 5 trades this week. 3 of them are the same usual. Like I said, we still have the Ford covered call, American Airlines covered call at 13.5, and Bank of America covered call. I'm currently up on all of those. If we go ahead and look at total returned, you can see that we have a $6 gain for Ford, $17 and $36 for the Bank of America. And I'll go ahead and show you guys my average cost basis on those. If we go ahead and, I think I showed you guys the Ford, but I'll show you guys quickly. Our average cost basis on this one was $8, so this one's almost to zero, so that's good. American Airlines, our average cost on this one was $23 and also getting closer to zero, and that's exactly what we wanted to do. So we have around $6 left on this one that we could earn. On the Bank of America one, this is the one where we got the most premium. We got $42 and we still have $6 left to earn for premium. So overall, they're all looking pretty good. They're looking like they're going to expire worthless, even though it's just Wednesday, so we still have 2 more trading days. But overall, the market is losing a little bit of volatility, so that means that stocks are not going to be making that big of moves. But we'll, if we can keep them and have the stocks for next week, then I'm definitely going to sell more covered calls on them because we're just consistently earning around $50 to $60 based off of only selling covered calls. Now on to the bigger trades that I ended up taking this week. So you can see that when the SPY opened on Monday, July 6th, it traded down a little bit, but then it started gapping out from around 316 all the way up to 317. And so when I saw that it was making that reversal and finding a little bit of support, I decided to try and short the VIX because, as I mentioned before, the two are most of the time they're negatively inversed, and so I thought that the VIX was going to drop considering that SPY was going higher. And we did have the right idea, but remember, even though most of the time they're negatively inversed, that doesn't mean that every single time they're going to be negatively inversed. And I guess this one time when I shorted it was one of those times where it just was not moving up to par with the SPY, because if we go ahead and look on July 6th, it opened down, as I mentioned, and right here, right around 9:50, 9:30, if you guys remember, SPY started rising, and the VIX, instead of dropping, it started rising. It started rising even more. And so once I saw that SPY had gotten all the way up to 317 and some change, and the VIX continued to rise, I decided to cut losses because it just was not moving up to par with what the SPY was doing. If we go ahead and look at the exact trade that I ended up taking, I ended up buying some VXX $31 puts. I ended up buying in two sets. I ended up buying some at I think it was like 84, and I bought 7 at 84, and then I bought one more contract at 80, and so we had an average price of around $90. No, about 80. Yeah, we had an average of about 80, and so we ended up selling them at 0.79. So it wasn't a terrible loss. I think the total loss on this one was about $36. So it was a smart choice of me to cut losses on this one, because if we can see, the VIX continued to rise all the way up to $32, and then even up to today, it's currently sitting at 33.69. So we go ahead and look at what the current value of those options that we got stopped out at. They're currently worth $15, so we would have been down close to, I'd say, roughly around 80% of the initial investment. So sometimes when trades don't go your way, it's better just to cut losses and move on, as I did in this one. But going on to the second trade that I ended up doing, which was kind of based on this one a little bit, because I saw that for some reason the VIX kept on rising, and as I mentioned, when the VIX rises, that means that there's big moves that are going to be implied in the near-term future. And so because I saw SPY kind of topping out around the 317 area, I went ahead and looked at some of the stocks in the SPY that were having the biggest moves. And the reason why is because I was expecting SPY to have a reversal after it started topping out around the 317 area. And so one of the stocks that was particularly holding up the SPY that day was Apple. And if we go ahead and back and look at Apple, we can look at the monthly chart. We can see that it's been going up non-stop. So we can see on Apple, we go ahead and look on Monday, it had a similar pattern as SPY. It started topping out right around when SPY started topping out around the 317 area, and because Apple was one of the biggest movers in the SPY that day, I decided to take a short position on Apple. And so what I ended up doing was buying some $375 puts, and so we entered the trade at around $4.85, so $485. And as you guys can see, right after it started topping out around a little bit over the 375 area, right when SPY started dropping. If we go ahead and look back at SPY up here, right when SPY started dropping, we can see that it had a similar chart pattern as Apple, because Apple was one of the biggest movers that day, so it makes a large component of the SPY, so it's going to have a similar chart pattern, not all the time, but some of the times it is. And so this is what I was basing the trade off of. I saw that SPY was topping off and that a sell-off was coming, and so we go ahead and look back at Apple. We can see that very similar chart pattern, that it topped out and then started selling off all the way down to 372. So we ended up taking profits right around 373, 374. I could have held on longer and made a little bit more, but because as you guys can see, it ended up dropping all the way down to around the low 372 area. But just as easily as it dropped, it could have gone higher, and you guys can see it did in fact end up recovering and going higher. Right now it's trading at $377, and we go ahead and look at what the options are worth right now. They're going to be worth a lot less, close to $200, $300. So we'd be down close to $200 on this trade if we would have held on and tried to get a little bit more profit. So that's why it's always better to take profits. The next trade that I ended up taking was on Snapchat, and the reason why was because Snapchat had gone up considerably. It's up close to $1.50 this week. It was actually close to $2 like 15 minutes ago, because it reached the high of 26.22. And so what I ended up doing on this one, I ended up shorting it yesterday after it had this big gap up in the morning. I shorted it. I bought some $25 strike calls right when it was around 25.10. We go in for an average price of around $89, or right around 90, and I was a little bit early on this trade, and it cost me some money. I didn't end up losing. I won I think it was $18 on this trade, but I was definitely early on this trade because like I said, I got in around $25.15, $25.10, and it continued to shoot up all the way close to $25.40. And so by the end of the day, it dropped back down to a little bit below $25, and I was right around break even, right around a little bit of profit. And so I decided to take the $18 that I was up because I had a cost basis that I was not happy with. If I would have gotten in around somewhere around 25.50s, which is where it shot up, I might have held overnight. But then again, in hindsight, I'm kind of glad that I didn't hold overnight, because today Snapchat continued to skyrocket, reaching a high of 26.22. So if we would have held overnight, we would have been down considerably higher. We go ahead and look at the July 17 and take a look at what the option prices are currently at. The 25 strike is currently at $52. So we would have been down close to $40 on each of the contracts that we bought. And I think we bought, what was it? I think we bought like 7 or 8 of them. Let me see. We bought 8, so we would have been down close to $320 on that position alone. So kind of glad that I got out for the $18 win. But then again, sometimes you have to trust your intuition, because just as easily as it could have gone higher, it could have also dropped down, and we could have been making considerably higher than $20. But you know what they say, you never go broke taking profits, and so it's always better to take a small profit than a big loss. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys at the end of the week to do another recap of how these positions end up doing.